Good afternoon. Welcome to Midcap Radar. I'm Reema Tendulkar. With me is Sonal Bhutra, and these are the top stories. Midcaps fall in a weak market after yesterday's rally. The Nifty holds below 18,000. In fact, it's 17,900 as we speak. Concerns over US Fed sticking to its tightening line resurface ahead of the Fed Chair Powell's speech today.
Sonak BLW gains after it inks a €40 million deal to buy Serbian sensor and perception solutions player Novalik.
Safari Industries gains on kicking off production of enhanced capacity at its Gujarat unit. Effective output will scale up to 3 lakh pieces a month at the unit.
Science DLM Arm files draft papers for its IPO with a fresh issue of 740 crore rupees. This move is in line with its plans to unlock value for shareholders.
A nod for reimbursement of spends on myotonia drug by National Health and Pharmacy Service in Spain boosts Lupin.
Okay, all right. Those are the top headlines. As far as the markets are concerned, they continue to be under pressure. A wee bit of recovery is what we have seen from the lows. The Bank Nifty especially, that's where we have seen a mild recovery, but still it is a weak day as far as the moves are concerned on the benchmark indices. We have losses coming in across the board. So in the Nifty pack, we are seeing declines coming in from the IT names. There is the banking index too, which is under pressure, and only Nifty Auto is in the green right now. And barring that, all the sectoral indices are seeing a bit of pressure. Well, Reema, it has been very volatile so far this week, right? We did see massive gains yesterday. Today, it is a day of loss, and VIX too, the India VIX too, has surged. It's up almost 7% today.
Absolutely. You know, right now, the Nifty is hovering around its 100-day moving average of 17,906. That's an important level. We went below that level, but we've come back to 17,906, hovering around that 100-day moving average. If that level is breached, then the level to track will be 26th December low of 17,774. So we're still about 120 points away from that level, but keep your eye on the markets. Today has certainly been a weak session for our markets. Let's drill it down to individual stocks. The advanced decline ratio is weak. 1 in the green for 2 in the red. This is Midcap Movers. Vivek is here to fill us in. Vivek?
Well, good afternoon. You know, not a very good day even in the broader markets. Quite a lot of bleeding, but some stocks continue to outperform. In fact, you know, the list of stocks that we have today, that have hit the fresh 52-week highs, these stocks have been clear outperformers since the last week of December, where you actually saw quite a bit of selling pressure even in the broader end of the universe. So first we have Nelcast. Now, this particular stock, in the last 12 to 13 trading sessions, the stock is up almost 30%. Mahindra CI, after the decision to hive off the loss-making German business, this particular stock has done almost 16% in the last 12 to 13 trading sessions. PG Electroplast, up 8% in just the last 4 trading sessions, and a clear outperformer even in today's trading session is Schneider Electric Infra. Now, this stock, in the limited sessions we've seen in this year, the stock is up 20% for 2023. Amongst the volume, the stocks that are buzzing on very strong volumes, one stock on our radar is BCL Industries. The stock was up 20% in yesterday's trading session. The company has intimated that it is looking at fundraising via the QIP route on the back of that, last couple of trading sessions on very high volumes. Goldiam, Traction Tech, as well as Tanla Platform, all of these stocks are moving higher on very strong volumes today. On the other hand, which are the stocks that are losing, a bit of profit booking coming in. 5-Star Finance after the strong run-up, TD Power as well, just cooling off the 52-week high, and Kalyan Jewellers, yesterday it outperformed compared to Titan, but today we've seen a bit of profit booking.
All right, okay. Those are some of the stocks which are in focus today, buzzing in the broader markets. Thanks a lot, Vivek, for that. It's time to welcome Shrikant Chauhan of Kotak Securities for a technical check on the markets. Shrikant, it's a day where we are seeing yesterday's gains being reversed as well. Bank Nifty is the one which is the underperformer today. What are the charts suggesting? We also have the financial services weekly expiry today.
Yeah, good afternoon. I think, the markets are clearly not going anywhere. They are between the broader range of 18,250 and 17,750 on the downside, but it is becoming more and more volatile. After breaching the level of 17,900, I think again we are heading towards the levels of 17,750. But the real trend will emerge when the market will break the level of 17,750. So in case if we see the market is dropping to below that particular level, then we may see the levels of 17,300 or 200. The way the events are lined up, I think the markets are eventually heading for those levels. That's the overall view. On the higher side, I think now say 18,000, 18,100 is going to act as major resistance for the market, and especially for the bank Nifty. It is consistently finding resistance since last 2 to 3 days. Even when the market was doing well, bank Nifty was down and it has formed lower top formation. So based on the formation, I think it is heading for the levels of at least 41,000, where it had support of 200-day simple moving average. So broadly, we are expecting Nifty to fall towards 17,500 or 300, and for the bank Nifty, 41,000.
Nifty headed to 17,500 and the Nifty Bank to 41,000. Shrikant, individual stocks, your recommendations?
Yeah, I think if we really to take any view in this particular market on any specific stock, then we need to look for mid-cap companies because they are doing really well. Stock-specific activity is certainly there in the market, and number of stocks like Mahindra CI, which has broken its all-time highest level, and now it is like trading into new highs, even though the markets are down. So there are like few companies. Zydus Life is the stock on which technically we are bullish. We are expecting stock to move towards the levels of 500 or 520. It is forming cup with handle formation. So it's a buy at current levels with a stop loss at 430 on the downside. We are expecting stock to move towards 500 or 530. The other stock which we like is SRF, and I think here the stock is forming double bottom sort of formation. Volumes are also there. From current levels, the stock can easily move to the levels of 2400. So SRF is also a buy at current levels with a stop loss at 2200.
Okay, all right. So those are some stock recommendations. Shrikant, thanks a lot for joining us and taking us through your technical bets as well. Let's do one thing, slip into a short break. Up next, we'll connect with Gulam Zia, the Senior Executive Director at Knight Frank, to discuss their recent report in terms of what the realty trends were in 2020. Welcome back, where real estate is in focus. A recent report by Knight Frank shows the Indian real estate market witnessed robust growth across segments in 2022. This despite regular interest rate hikes throughout the year. Residential sales, in fact, hit a 9-year high in the year gone by. To discuss demand trends in the realty space and what 2023 holds, we are now joined by Gulam Zia, the Senior Executive Director at Knight Frank. Gulam, good afternoon. Thank you so much for joining us. Well, you've spoken in the report about a broad-based growth across all the segments as well. So we'll touch base on each of them. But let me start with residential real estate, because a 9-year high in terms of growth is what we are seeing here. What does 2023 really look like? Which are the geographies which will see some growth? Because we are seeing increased traction in the likes of NCR, which was seeing some slump in the years gone by, and something like Ahmedabad as well, because that has been the focus point. Where are these bigger developers really focusing on, and which could be the growth markets from here on?
Look, your first question is what do we see 2023 panning out like? And well, at least our house view is that the transactions will not be affected as much, because it's based on the last quarterly results and the last 6 monthly transaction numbers as well, which are in spite of at least 3 or 4 consecutive rate hikes in the home loan interest rates. And the market is not yet showing any fatigue or not really going down anywhere. So that gives us some comfort to state that going forward as well in 2023, while there is expectation that the rate hikes will truncate and the last one is already in front of us. So that is also giving us additional comfort that the buyers have taken the home loan interest rate hikes in their stride. So 2023 is not going to be way different than 2022, which has been a 9-year best, as you spoke about earlier. So now talking about your specific question about which locations shall do better than the rest. Well, let me tell you, the big numbers still come from the cities like Mumbai, Delhi and Bengaluru. And let's not forget, NCR region has done phenomenally well, almost about 40% growth year on year, which is, of course, because about 5-6 years back, 7 years back, market in NCR have really suffered a lot. So it is coming back, but then it's getting back with a bang. So what we're expecting may happen in 2-3 years has happened in 1 year in terms of NCR getting back on track. So the big numbers that we're expecting that shall come through in 23 as well will be NCR to watch out for. Bengaluru and Mumbai have shown good growth, but will remain, not as big a number as NCR will show. You spoke about Ahmedabad. Yes, Ahmedabad has shown both transaction volume shooting up. In fact, Ahmedabad has shown the highest price rise in last year or so. But on both these counts, Ahmedabad is still a smaller market compared to the large ones like Mumbai, Delhi, and Bangalore, etc. So the focus shall remain on the top three markets, one or two markets which are to be watched or to be focused on also alongside. One is Ahmedabad and two is Hyderabad. Hyderabad has also shown phenomenal results in last year, and we are expecting it to continue even in Hyderabad. Over to you.
What should we expect, Gulab, from the budget? Are there any kind of SOPs that you are asking for? What would the demands be from the real estate industry?
There are 2-3 things which have always been there. Mostly they are not accepted. The biggest one I am looking at, or I'm observing for last at least 15 years, is the demand that this should be given the industry status. And of course, a lot of expectations related to that, because fund flow, etc., will be cheaper and so on. But that hasn't happened so far. Whether it happens or not, anybody's guess. If it hasn't happened in the last 10 years, would it happen now? Anybody's guess. The other 2 or 3 things that are important are some respite in the interest regime for the salaried people. When you're taking home loans, etc., your income tax has to be released a bit for giving them some more respite to buy more houses and take home loans. So that is something which we are expecting. But that's it. Let me also make one point amply clear. In last 7-8 years, a lot of things have happened in the policy framework. So whether you talk about regulator or you talk about things like setting up a separate fund to salvage the bad projects, etc., the Swami SBI fund, a lot of activities, a lot of things have happened. Both supply side, demand side initiatives have happened from the government side. So that is perhaps the reason why, besides the overall economic improvement, last year was a bumper year, because of those things have at last fallen in place, and now things have started flowing into the sector. So expecting much more, honestly speaking, I'm personally not expecting a lot from the government, because they have done much more and more than what they should have done earlier. But still, demands are there. Let us see how much of them are met with.
Okay, so demands are there. How much will be met is something that we'll be watching out for. The other spaces, warehousing and commercial real estate. We've been talking about these layoffs that we are seeing across the IT sector. Of course, not in India, but global tech names as well. Is that something which will be seeing an impact on the commercial real estate? And also warehousing. What is the potential here? Are there more additions expected in 2023 itself?
Okay, let me start with the good news first. The warehousing sector had a bumper year last year, and you don't see much of a letdown or any slowdown even in 2023. Warehousing shall continue because of the whole consumption. The local Indian consumption has been growing a lot, whether it is upper end, mid end, or lower end. All segments are consuming, and that's where the warehousing and logistics industry is showing great results. The best, almost about 50-odd million square feet was absorbed last year, 2022. We are expecting it to continue in 23 also, with a lot of large infra projects coming in, like the dedicated freight corridor. Lots of MMLPs are opening up. The Chennai one is already done. At least 4 more are on the block. So a lot of these things are happening, which will give a huge boost to the warehousing sector. So good news for warehousing sector shall continue. Coming down to the office, while current year 2022 did see a great number, like almost about 52 million square feet of absorption, which is the second best historically. But still, the global economic concerns, etc., are clouding the time ahead, a quarter or two ahead. And that is something which is giving us also some concerns that this 52 may shrink to 45-46 million in 23. And that is back because of the overall global concerns. As you rightly said, Indian economy, not much to worry about. Local consumption, local story is going strong, but the global impact will definitely be felt on the office space absorption. So as I said, there is expected shrinkage in the following year. It will not be that huge. And once again, let me be one more point to be put across. If the global concerns are taken care of, whether it is the Russia-Ukraine war and a couple of other recessionary trends shown in the Western economies, if they are taken care of, then the bounce back will be faster than expected. But all said and done, we are expecting some slowdown in office sector in 23. Back to you.
Ghulam, what percentage of our office real estate space is occupied by MNCs, which is where the concern is rising from?
Well, the main concern, first of all, let me qualify this, that whatever layoffs you're talking about are essentially in IT sector, technology sector. And that sector, the share of that sector in the overall office sector of the country, which is almost about touching 800 million, has shrunk to below 50%. There was a time when almost about 80-85% per annum absorption used to happen in IT. That has come down to almost about 40-45%, and that is giving us comfort that the other sectors have taken up a lot, whether it is manufacturing. A lot of other sectors have actually come up to take up office spaces, and that's a music to ears. And that's what, if your question is about MNCs alone, I would say let's qualify. It's not just MNCs, but the IT or technology related MNCs which we have to worry about. And that share, in my view, would not be more than 25-30%.
Okay, but that's still a sizable number. And what about startups, right? Even startups are going through a winter, a liquidity winter. Funds have dried up. Do you see the office spaces leased by startups also coming down significantly?
Well, the startups are typically getting into the incubation space, which in our local parlance is the sharing offices kinds of WeWorks, etc., that we're talking about are the ones where the startups are going. But that said, let me also highlight that last year startups, the share office spaces have taken the greatest of the space. Almost about 23% of the overall space absorption was in that segment, which means that the startups are also not showing any concern yet. Only thing is the campuses or the large million or two kind of absorptions that used to happen from the big tech players is under a big concern. The startups in any case were not occupying a large space, and hence we are not unduly worried about that.
Okay, all right, Ghulam, we take that point. Thank you so much for joining us and detailing what the report really said and what the outlook for 2023 is for various segments of the real estate sector. Let's slip into a short break. On the other side, in our special segment, Mid-Cap Spotlight, we'll focus on RateGain Travel Technology. Stay tuned.
Welcome back. One of the big movers today has been RateGain, 3.5% higher today, up 12% in the month of January so far. And this is the stock that we will be covering in our mid-cap spotlight. Well, the news is that Anand Rathi has initiated coverage on RateGain with a buy rating and a target price of 415. They are valuing RateGain at 32 times FY25 earnings. Now, what is RateGain? Now, RateGain is a SaaS provider. They provide a lot of services and products which you can rent from them, which cater to the hospitality and the travel sector. So they will help hotels find out what the competitive pricing is, where consumers are going. It will help them with their marketing spend to make sure that it's more targeted with a greater ROI. So it's purely catered on the hospitality and travel segment. Now, what Anand Rathi is saying is that where RateGain scores, because this is a fairly competitive space, they're saying that RateGain is present across the entire value chain. So they cover hotels, online travel agents, car rentals, airlines, tour operators, cruises, ferries, the entire gamut. And their clientele, their distribution includes close to 190,000 properties. They have 8 Fortune 500 companies, 23 top-rated hotel chains, 25 top online travel tour operators, leading car rentals, so the entire gap. That's point number one. A lot of clients look at RateGain as a means to reduce their costs, because if you do targeted marketing, it will increase your ROI and bring down your costs. So they don't necessarily see the services from RateGain as a spend, but rather as a way to bring their costs down. Thirdly, they're also saying this company continues to pursue strategic investment, acquisition and opportunities. In the past 3 to 4 years, the company has closed 4 major acquisitions, and the latest one is that Adara one we had recently spoken about. Anand Rathi expects RateGain to clock about a 43% revenue CAGR over FY22 to FY25 and an 81% CAGR in the same period in terms of the EBITDA. So they are expecting the profitability of RateGain to also go up. So it's a buy rating, target price of 415. So thumbs up.
Okay, it's a thumbs up, and that's what we're seeing in the stock move as well today, right? So that's about RateGain Travel Technologies. We also have Gokuldas Exports, which is in focus again on the back of a brokerage note. Here, IIFL has initiated coverage on the stock. They have a target price of 537 rupees per share with a potential upside of 42% from current levels. Well, of course, we know it is one of the leading apparel manufacturers and exporters in the country. Broad range of apparel products as well. They have the likes of outerwear, there is activewear, there is fashion wear as well. So IIFL says that, yes, there are certain triggers which will lead to the stock rally that they're talking about. The company has an annual capacity of 36 million apparel pieces. In FY22 itself, they shipped around 23 million apparel pieces already. The things that will work in favor of Gokuldas from here on. The first one is supportive government policies. We have spoken about the PLI schemes being announced by the government. There is free trade agreements that the government is entering into with other countries as well, so that will boost exports. The second one is the company is well placed for market share gains as well, as what IIFL says. There's significant turnaround that they are seeing under the current management, and the recent foray into knit segment increases cross-selling opportunities as well. That would mean to the current clients they can sell different products as well. So that is something that will work for the company. The ongoing capex is something which is a trigger as well. They have a capex program of 3.6 billion over FY22 to FY24, and this could yield 4 times the revenues that the company is doing right now. So that's a big move that the brokerage is talking about. In terms of their EPS, they expect 22% EPS growth over FY22 to FY25, and the stock is also not very expensive. It is trading at 14.7 times one-year forward earnings, and that is something which is working for Gokuldas Exports today, Reema.
Okay, that's about Gokuldas Exports. For the markets, once again, we've dipped below the 17,900 mark. In the frontline pack, it's the Adani Group stocks which have taken a bit of a hit. Adani Enterprises is down 7%. Adani Ports has slipped 3.5% as we speak. And even outside of that, Adani Power 4.5% gone. Adani Total Gas and Adani Transmission and Adani Green lower by nearly 3%. Apart from that, PSU banking names have taken a hit. We highlighted how the Nifty PSU banking index is down close to about 3% and a little more than that, 3.5%. UCO Bank, IOB, Bank of India, PNB, these are stocks which are showing you cuts of close to about 3 to 4%. So banks are under pressure. IT continues to remain weak in trade. And as we speak, the Nifty is down below 17,900, 200 points knock on the Nifty, with the Sensex showing you a cut of 650 points. Out of time now on Mid Cap Radar Mutual Fund Corner when we return.